Curzio here with no live video, and today's big story was obviously Snowflake, right? IPO'd, cloud-based company. The stock was supposed to come out at, well, it came out at 120. They upsized the offering, but if you look at the chart, and again, I like to bring Yahoo Finance to show a lot of this, it opened at 245. So average investors couldn't buy this stock until it opened at 245. And it's funny because even though it went to 300 and through the roof and, it still finished around that same level, right? I mean, it hit 300 a little bit, but it still finished at the same level. Now, Snowflake, it's a cloud-based platform. That's what's being pitched as, but it's really a big data analytics company that works. It's built into AWS, Azure, Google Cloud. It consolidates data into a single source, right? So the market cap, you look at this stock, the market cap now is $70 billion. So if you want to put that in perspective, the market cap of this company in February, a few months ago, just February, was $12 billion. Now, why is this going through the roof, right? Because everyone's like, this is crazy, and you're looking at a company, it's unbelievable. I'll show you why. So if you're looking at, I'm going to bring this up for you guys. It's all about growth, right? That we have to know by now how important growth is. I mean, you look at revenue up 133% here. A net retention rate is monstrous. Attaining performance obligations are just numbers that a couple people put together. Total customers up over 100%. Their margins are actually 65%. 65%. So in their S1, which is basically the report that comes out before that you can read before it goes public, they're going to do probably about $500 million in sales this year. That's what they're expected, right? So they're saying the total addressable market is $80 billion or something like that. So they're doing $500 million in sales this year. That's their run rate based on if they follow what they did in the first 6 months. You're looking at a stock right now that trades 140 times sales. To put that in perspective, Zoom may be the most expensive company I ever heard of, I know of, and you're seeing those growth numbers. Yeah, if you're looking at Zoom is 80 times sales. Again, this is 140 times sales. The bigger picture here, guys, is I'm not going to tell you to buy the stock, sell the stock. I don't know if it's going to be 150 tomorrow, if it's going to be 450 tomorrow. I have no idea. But what I can tell you is you need to understand the premium companies are getting for growth. That is what this market's all about. You may have missed out on the Zooms. You may have missed out on the Wafers. You may have missed out on a lot of these stocks that have really taken off the Teslas. There's a whole lot of small cap companies that I've been tracking. And I'm putting this in my Curzio Venture Opportunities newsletter, where these names are growing much faster than the overall market, but yet they haven't participated as much in the rally, and they're trading at cheap valuations relative to their peers. This is where the next wave of growth is. If you're looking for the 300, 400, 500% movers, the small cap market and what the Fed came out today and just said, hey, they didn't announce yield curve control, but they basically did in the short on the front end, saying that we're going to keep interest rates low for another 3 years, right? And if it goes higher, they'll implement yield curve control, which is basically capping rates at a certain level long term to make sure that they're low, right? So you're looking at a small cap market that's about to take off, and there's so many names that are growing that are off the radar of people's lists. We just recommended 3 of my Curzio Venture Opportunities newsletter. They're all up already. They're all trading below the buy up to price, but start focusing on growth. If you have a company in your portfolio and it's not growing, chances are it's going to go down. It's going to go down by a lot. You need growth. You see the premiums here. You can't justify it on valuation. You can't justify it on P ratios or whatever. But as long as these companies continue to grow the way they're growing, they're going to deserve that premium, and people are going to continue to buy them. Don't fight that trend. If you want to fight it, fight it. Buy those value stocks. But the value is going to continue to get crushed. Make sure the stocks that you're getting, or that you're buying, and the stocks in your portfolio have that growth component. And I'm seeing that a lot in small caps. If you want more information on that, go to my website, curzioresearch.com. I have everything on there about yield curve control, why small caps are going to take off. And as always, guys, I'll put back to you soon. Take care.